Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to talk about Equitable Group stock. I will discuss their business, the future plans for 2022 and beyond, their dividend, the risk associated with this company, and finally I will provide a detailed stock analysis using my personal discounted cash flow model, and will then provide you with the fair value of this stock depending on your investment goals. The company HQ is located at Toronto and their shares are traded on TSX for almost 67 Canadian dollar at the time of recording this video. They pay a modest dividend with a yield of 1.6% at the time of recording this video, and the market capitalization of the company is around 2.3 billion Canadian dollar. Equitable Group were able to beat S&P TSX and S&P 500 index in the last 5 years, even after the recent pullback in the share price, which is great for a company in financial sector. If we compare the stock price of EQ Bank or Equitable Group to other banks in Canada like TD Bank, Royal Bank, Bank of Nova Scotia, and BMO, we can also see that Equitable Group beat almost all of them in the last 5 years in the terms of the returns with a large margin. And as such, it is interesting to know more about their business and see the valuation of their stock at the moment. Before starting the video, I want to emphasize that I'm not a financial advisor. This video is not a financial advice for you to buy, hold, or sell this stock. This is just my personal opinion. You should always do your own research before making any financial decision. With that being said, let's start this video. Equitable Group, which is the holding company of EQ Bank, markets itself as the Canada's challenger bank and a new competitor to conventional banks in Canada. EQ Bank provides various traditional financial, investment, and loan services to their customers, including term deposits, GICs, high-interest saving accounts, tax-free saving accounts, residential mortgages, and line of credits. The company also offers digital banking services, including international money transfers, US dollar accounts, and a suite of registered products. They are really popular between millennials for no-fee services, no minimum balance accounts, no separate savings and checking accounts, and of course their high-interest saving accounts and GICs, which usually pay a much better interest rate than traditional banks in Canada. For example, right now they have a promotion and will pay 2.3% for 1 year registered GICs and 2% for 3 months non-registered GIC deposits, which are significantly higher than conventional bank GIC rates. For example, TD Bank pays only around 0.7%, and that is with the maximum deposit. For 100 days or a little bit over 3 months GIC deposits at the moment, which seems rather low compared to EQ Bank rate. EQ Bank has planned to diversify its sources of funds in the coming years. Particularly, we can see that the total deposits is growing at 26% year over year in the last 5 years, which can help the management to navigate through various financial challenges in the next couple of years. According to their guidance for 2022, EQ Bank plans to grow almost every single aspect of their business, from GIC deposits to their financial and mortgage business, by double digits in the range of 10 to 15% year over year. Particularly, they expect 8 to 10% growth in the diluted earnings per share, which I guess is a little bit conservative, but still it seems like a great growth rate for EQ Bank. They also plan to launch their EQ Bank payment card sometime in 2022, which would be a great addition to their digital services as a no-fee card. Equitable Group was able to beat their own estimations by a great margin in 2021 in pretty much every single category in their business. Their diluted EPS or earnings per share grew by 29% year over year, and now they have $42 billion Canadian dollar assets under management, which grew by 16% year over year in the last 6 years. They were also able to grow their total revenue aggressively in the past couple of years. They almost doubled their revenue in the last 4 years, which is an amazing and impressive growth rate. Equitable Group has a history of paying out and increasing its dividend year over year. They pretty much tripled their dividend in the last 7 years, while their payout ratio is extremely low, which leaves them a room for further increasing the dividend in the coming years. For example, they increased their dividend by 51% only this year, as they couldn't increase it before during the COVID and because of the central bank restrictions. And they have planned to increase their dividends by 20 to 25% per year for at least the next 2 years, which is amazing. Of course, owning any growing business compared to established ones will come with higher potential rewards and usually higher risks. EQ Bank does not have a long history like conventional banks in Canada, and their business and brand is not as established as their conventional competitors. While they have some innovation cool platform to attract millennia, they are susceptible to potential disruptions from crypto projects and other fintech companies. The coming raising interest rate environment is not bad for banks, as they will probably make more money, but if we go through a recession and crisis in the housing market, I think EQ Bank will face some new challenges. So while they are not in a challenging environment at the moment, you have to always consider the risk of investment in a fairly small cap financial company. This is my favorite part of the video, where I can show you my stock analysis based on the financial data I discussed in the previous parts of the video. I use a discounted future earnings model, which basically estimates values of stocks based on the projections of their future earnings. So I make some assumptions about the growth of the company in the next 10 years and then discount the future earnings per share into the present value of the stock based on my expected rate of return. So I start with the past 4-quarter diluted earning per share of the company, and based on 3 different scenarios, I predict the future earning of the company in the next 10 years. In the bear case, or the most negative case for the stock, the company can grow only by 6% in the short term, and then the growth rate will drop to 5% in the long term. I consider a terminal multiple of price to earnings of 6 for this case, which is consistent with historical bear periods for bank stocks. For normal case, I consider a little bit better growth and a terminal multiple of 8, which is the historical average multiple for this stock. For the bull case, or the best possible outcome, I consider the business grows by 20% in the short term and then it drops to 11% in the long term, and I consider a terminal multiple of 10, which is the bull multiple for this company. I assign a 50% chance to the normal case, a 25% chance to the bear case, and 25% chance to the bull case. For growth stocks, I usually expect 15% return, and for dividend stable stocks, I usually expect 10% return. If I expect a 10% return from this company, the fair value of this stock is almost 69 Canadian dollar, which means compared to current share price of almost $67, the shares are traded at its fair value with a little bit of discount. And it is a buy according to the model. It means if you expect 10% return on your money year over year, this stock is probably going to deliver that 10% in the next 10 years. It's always fun to see what analyst predictions are for a company, and according to Yahoo Finance, the analyst price target for this company is currently at $97 per share for 2022 with a buy rating. It is also a buy according to research team. It is a sector outperformer according to Scotiabank analysts, and Thomson Reuters has basically a positive outlook for the company, which all means analysts are optimistic about EQ Bank performance in the next year. In summary, Equitable Group is a fast-growing business in financial sector which wants to challenge conventional banks in Canada and gain more market share, acquire more customers from them. They had an amazing growth in the past couple of years, and the future of company seems very good. Their shares are also traded at a fair value, which makes them attractive buy at this share price. I personally own EQ Bank, Equitable Group in my portfolio, and will add to my shares at this recent dip. I hope you enjoyed the video, and if you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching, and I see you in the next video. Farewell.